And welcome into the roundtable here. And of course, we're talking about used trucks. And not too long ago, we did another roundtable about this very subject just after the massive peak of the prices of a used truck started to come down. And where have they settled? Where are they going at this particular time as we head into 2024? Two people with expert analysis to talk about it. Alan Adler joined us, our Midwest Bureau Chief from Nunica, Michigan, and also Chris Visser, the Director of Specialty Vehicles at J.D. Power, joins us as well. Gentlemen, thanks so much for joining us. I'm going to throw up a chart that we have here at FreightWaves that basically kind of shows where we're at this point in time, at least in terms of our data. I know that, Chris, you've got a chart we'll get to here in just a little bit, but things are falling back down again, which we've been using that term pre-COVID levels. And Alan, it looks like we're kind of at least in the neighborhood of where they are.
Well, the classic line that what goes up must come down, and it has now, and just as precipitously as it went up, it's come down that way. I think Chris can explain sort of the ins and outs of that, but obviously we've been seeing now for months prices going down because after a period where it was difficult for fleets to get new trucks, they held on to their trucks longer. That starved the U.S. used truck market, and now we've got new trucks are available again. And so, you're getting a flow of used equipment coming into auction and at retail. And, that will put pressure, supply and demand type pressures, right?
So, Chris, you brought your own chart here as well. We're going to throw that up and give you a chance to explain kind of what you guys are seeing at J.D. Power in terms of the used truck prices.
Show a similar trend to what ACT's numbers showed. Basically, I also like to compare the current period to pre-COVID. The strong market pre-COVID was in late 2018. The last weak market was late 2019, right before COVID. And right now, in nominal numbers, we're right even, maybe slightly below 2018's strong market. So we would still have a way to go to get back down to a traditionally weak market. Even though we've come down roughly, 140% from the peak on pricing, we're still above the last weak market by a pretty substantial number.
Alan, what do you look at in terms of the factors that are going to affect this the most? And obviously, one of the big ones, of course, is the fact that capacity is running rampant in the market. You don't necessarily need it at this particular point. That can also drive the price of a truck down. But what are you looking at in terms of how the economics of this work out as prices tend to ebb and flow?
Well, I think a couple things when it comes to, the used market. Basically, you had a lot of people when COVID hit that got their authorities, from the Department of Transportation and started or resumed business and that sort of thing. Those people now who bought trucks at elevated prices, used trucks, especially elevated prices, are kind of stuck. They're leaving the market. They're surrendering their authorities. They might be joining on with for-hire fleets and that sort of thing. But that capacity obviously is still out there. At this time, I'm not really sure who would be buying other than for replacement. And you have replacement cycles really within the new trucks as well as used trucks. I mean, we've got emission regulations coming. That's going to influence a lot of people to make some moves. But as far as just when all that happens, I have to look to the expert over here on my right.
I was going to get that just a little bit there. Chris, what do you see are the factors that are kind of mitigating this right now?
Yeah, well, I agree that the market since COVID has followed spot rates up and down, even going back before COVID. Capacity is basically the fundamental factor behind used truck pricing. Looking forward. Most of the firms who predict what capacity is going to be doing in 2024, point to a continued cooling up through the second, third quarter, and then recovering in the second half of the year. That would coincide with the likely burn through of all the excess capacity that the nation's fleet is cycling through auctions. As all those spot rate owner-operators that Alan just mentioned either exit the industry, go to work for a fleet, or do something else. And, as long as the macroeconomy stays relatively stable, which is a big asterisk, of course. Our numbers, our forecasts point to used truck, at least stabilization, maybe not increase in prices, which I've heard some people talk about, but basically definitely a stabilization of depreciation, at least back to historic 2.5–3% per month, maybe even a little bit better than that in the second quarter, going into the third quarter.
Ellen, you brought up emissions just a few moments ago. That's obviously going to be a point that people are going to be talking about over the course of obviously the next couple of decades in terms of how the trucks turn over from carbon-based to more alternative or perhaps electric fuels there as well. As you look at this, obviously we don't see a major impact immediately, but is that going to start to become part of the conversation, especially in California?
Well, I think more than maybe buying electric trucks, you're going to see the typical pull ahead of purchases that on new trucks that always accompany changes coming in emissions. The new emission standards in 2027 on nitrogens of oxide is going to add roughly $25,000 to the price of a new truck, and then of course you have to put all the taxes on top of that. So that's a pretty good incentive for fleets to both modernize their current fleet now and also, be grandfathered in essentially against new emissions taking effect. These are going to be pretty clean trucks they'll buy anyway. Again, I'm talking on the new side, and all things that do flow to the other end. And I think Chris can talk to why the newer used trucks are already commanding better prices, honestly, than the older trucks. There's going to be such a push to get the older iron off the roads that everybody's sort of rising tide here is used. I don't know if that's accurate, but I think that even the used trucks will get newer over time, and they will have better safety equipment, they will have better emissions equipment, and that sort of thing.
Chris, to that point, in terms of how the used market is going to respond to emissions, obviously the older trucks are going to be phased out much quicker, and the newer used trucks seem to be in higher demand. How do you see that in terms of a longer outlook?
Yeah, well, first, I think the regional markets have already been impacted by things like the California 2024 regulation. I think prices are moving upwards or stronger on the West Coast because of that. And I think we already saw that in 2023. 2027, obviously that's going to be the big one. And in a pre-buy situation, we pull ahead new truck orders, but also the lowest mileage late model used trucks are also in very high demand. So trucks that are 2 years old or so, with say under 300,000 miles will benefit pretty substantially in starting in 26. And then we could see the general pre-buy activity start in 2025, which basically means increase in orders, increased deliveries of new trucks, and the newest of the new used trucks being in stronger demand in 25.
Alan, do you see the market for used trucks changing from what has traditionally been, of course, the hand-me-downs from the enterprise carriers on down, or could this possibly change as things have changed in terms of what is impacting that particular purchase? Granted, a new older truck or again getting a hand-me-down from a larger carrier.
Well, I think one of the things that, in addition to the pre-buy that we've been discussing, I think the other thing is that even though a lot of the additional orders that have been placed for new trucks because of COVID and the fact that we had 2 years basically where you couldn't get a new truck in any meaningful way, I think we still have some catch up on replacement demand, and so I think that's part of what's driving the new trucks right now. We were over 40,000 orders in November. Now, those are subject to cancellation, of course, and you'll probably see some of that fall out. But I think we're still probably catching up in some senses with trucks that people kept in their fleets longer. Those will obviously have higher miles and will fall into the used truck thing. I would let Chris comment as to whether the older trucks coming out with higher miles are really changing the used truck market. I can't answer that myself.
Chris, go ahead and take a shot.
Yeah, certainly the trucks that are coming back were kept in service longer. We have trucks that are, showing 200 plus thousand miles per year on average, per year of use, which is historically very high. Because as we all know, they were basically doing the work of 2 trucks through the COVID bubble. So yeah, those are the ones that are cycling through the market. And the higher mileage category of used trucks has never been strong, and it's certainly not strong now. So on the weak side, moving over to the the other comments, contract rates are what are keeping orders strong on the fleet side. We're even though contract rates have pulled back somewhat starting mid this year, they're still historically strong. So fleets are still generally happy at the rates they're getting to move their freight. So that's why orders are still strong. But yeah, that continued replacement on the part of fleets is going to result in continued influx of trades. I think the key difference is, or the key change we'll see in 2024 is that represents a normal trade cycle. And then we'll finally work our way through the excess extra trucks that were purchased during the COVID bubble.
It's going to be very interesting. As you mentioned, the economy is certainly a large asterisk in all of this. Chris and Alan, thanks so much for joining us for our roundtable.